Stacy Rasgon, AMD, and somehow all roads lead back to Intel with you, because Intel's on your mind as we're thinking about AMD.
Well, I mean, to be fair, you could argue from a market standpoint, Intel's results may be somewhat supportive. So Intel's results were not good. They were objectively horrible, but they were actually better than expected on both PC and data center. And Intel thought that the PC channel, which has been undergoing a pretty significant inventory flush, ought to be normalized exiting Q2. So those things are somewhat supportive, I think, for AMD. They're in the same markets. Now, that being said, I actually do think Intel's print made the setup for AMD just a little bit tougher, particularly on data center, because Intel's results within data center, while they were bad, again, were better than expected. They actually beat fairly handily in the quarter. And so if AMD does not show a similar kind of data center upside, because AMD also guided data center down pretty significantly into Q1, if they don't show a similar amount of gain, you can start to poke holes a little bit into the share gain thesis around data center for AMD. So I do think from that standpoint, the setup is slightly harder, but the market commentary may be at least somewhat supportive relative to what were very low expectations.
Yeah, when are you ready to declare that PCs have bottomed?
Well, they may have, right? Again, so it's not just for these guys. It's not necessarily just the PCs. It's also they sell the chips, the CPUs, and through much of last year and even much of the year before, the industry was overshipping CPUs versus PCs. I think at its peak, CPUs were overshipping PCs by 30%. They are now undershipping by a very wide margin. Intel suspected that they were undershipped the market by 20% in Q1. It may have even been worse than that. And so because of that, eventually you can't undership forever, right? So even if PCs themselves are weak, you move from undershipping to shipping to demand, and that actually gives you a lift. And we upgraded Intel a little while ago. That was a big piece of the upgrade, was just channel normalization. It does seem like it's likely to happen.
You cover NXPI?
Sure.
I mean, I guess I ask you that in the context of stocks up 3.5%. And, as we're ready to declare that, those kinds of companies are going to falter, it has a heavy exposure to autos, what's really going on there do remain some upside surprises, yeah?
Yeah, so NXP, they had a pretty strong quarter. And so they beat and raised. And what happened in the quarter, their core market, sort of auto and core industrial, is still pretty resilient. And they've had some fairly significant weakness, again, in some of these consumer areas. And China, and they were sort of less bad than they expected. And they're seeing some, recovery. They've got mobile recovering into the back half and some other things. And so those actually look pretty good. The margins were okay. I think the big question for them obviously is sustainability. I know investors are worried a lot about auto because it's been the last market that's holding in. Everything else has sort of shown signs of rolling. Auto has still been very robust, but again, it can't last forever. You go back to those same kind of analysis, semis versus end market, auto semis versus auto shipments.
Right.
And they've massively diverged over the last couple of years. And I think we're shipping, I don't know what it is, 50 or 60% above the historical trend line in terms of content. And people will point to lots of things, EVs and pricing and everything in terms of driving that content up. But it's a very big gap. And so people have been wondering about sustainability. For now, though, it still looks like it's going.
All right, good stuff.